So you served your country in the military, the Coast Guard, or the National Guard, and now it's time for you to buy a home. I'm going to tell you all about how to use a VA loan to get into the home for as little as possible with great interest rates. And here's the best part, no private mortgage insurance, even though you're putting $0 down. Stay tuned to learn how. Hi, this is Tom Kalagher with Fairhope Mortgage. I'm excited to talk to you today about VA loans. My dad was in the Navy, my grandfather was in the Army, and I'm proud to support veterans whenever I can. And I'm coming from you live in front of the USS Alabama, right here in Mobile Bay. VA loans provide a zero down payment loan option with no private mortgage insurance, great interest rates, and an easy closing process for our veterans. It's one of the best benefits you come away with when you get out of the military. You can use it to buy your first home, your second home. You can even buy a duplex with it, live in one half, and rent out the other, helping pay your mortgage. First, let's talk about the down payment. Most home loan programs require you make at least a small down payment to buy a home. The VA loan is an exception. Rather than paying 5, 10, or 20% of the home's value towards the purchase price, VA home loan can get you financing up to 100% of the home's purchase price. Next, let's talk about mortgage insurance. So a conventional loan typically wants 20% down if you're not going to have mortgage insurance. A VA loan allows you to have no mortgage insurance with zero down, saving you hundreds every month. How does this happen? It's because the government thanks you for your service by backing up your loan. All you have to do is check your C of A to make sure you're eligible, and if you are, then you could get a VA loan up to $647,200 without any down payment. Above that, there might be a small down payment on the amount above that 647 number. VA loans are also very flexible in terms of the loan products that they offer. You can get a 30-year fixed rate, same interest rate, same payment for the life of the loan. You want to pay it off a little earlier, you can do a 20, 15, a 10-year, it doesn't matter. You can also do an ARM interest rate, which means that interest rate might be fixed for 3, 5, 7, 10 years. If you know you're going to be in one place for 3 years and you know with certainty you're moving, use an ARM to get a reduced rate. Get a 7-year ARM if you're going to be there 3 years. Keep yourself protected. You know you're going to be moving anyways. You can even have 2 different properties with a VA loan. You could have one that you bought when you first got out. Maybe you buy that duplex when you first get out. You live in one side for 3 years. You rent out the other. Now you want to go and buy your family home. You buy that family home, you keep that duplex, you rent out both sides, and it pays that mortgage, and it helps make you wealthy when you retire. So let's talk about qualifying for a VA loan. On a conventional loan, you can never go over 50% debt to income. FHA is a little bit more liberal. You can go up to 56%. VA doesn't have a specific cap. Depending on your credit score, your income, and your residual income, which is after all your loan payments are paid for, all of your credit cards, everything like that, as long as there's enough money left over at the end to live on, you could do a VA loan in the high 60% range. And there's no firm cap. They'll let you go up as high as need be. This means you can buy a bigger, better house with the same income using your VA benefit versus using a conventional mortgage. So let's talk about the VA funding fee. When you get a VA mortgage, there's a small funding fee that you can roll into the loan. You don't have to pay it up front, and it differs depending on how much the loan is and if it's your first, second, third use of your VA benefit. Now, not everybody has to pay this funding fee. If you were injured during your service and you're more than 10% disabled, that funding fee is often waived. You could save a ton of money that way. In addition, the closing costs on a VA loan can be lower than a conventional loan. That can help you save money up front and get into that home for a little bit less money. And last, VA loans are assumable. That means if you buy a home when interest rates are really low and then you want to sell it later, that can be a selling point to the person buying your home, because your interest rate might be in the 3s and going interest rates might be in the 6s. And you can have somebody assume your loan and just pay you in cash the difference between what's remaining on your loan and the new one. Now they have to qualify to be able to do that, but all you have to do is call your servicer and talk to them about assuming that loan. So if you served your country and now you want to buy a home, give me a call. My phone number and website are below. I'd be happy to help you out. Thanks a lot for watching, and talk to you soon.